Hey, Jimmy Burgess here with Beach Properties of Florida. I'm excited to share with you the market update on what we saw in 2015, a wrap-up of the numbers year over year. What are we seeing increase-wise? The reason I'm smiling is that I've been doing this, started my first one of these when I started selling real estate in 1994 along 30A, and some years are better than others. Some years we see some solid growth, and some years we see some pullbacks. This year is a very healthy year. It's hard not to be excited when we're seeing this year we broke over $1 billion worth of residential sales along 30A. We saw 24% increase in our sales year over year. We saw increases in the number of units. We saw a record year in the number of units sold. We saw steady growth as far as the average sales price. All of these things are great. What I want you to know is that before I get into the deep dive into the numbers is that this is a 30,000 foot view, so to speak, of the market. This is the average of all of the residential units. But we have many small mini markets along 30A. And so if you have a property that you own and you're wondering what the value is, when you see these numbers, you're going to realize that if you've owned the property, chances are, depending on where you bought it and what type of property it is, in the last year, you've got equity. So if you've held a property for a little bit of time, you're probably wondering what the value is. Feel free to email me, and you'll see the email address below, but it's jimmyburgess@bpfla.com. Email me and let me know that you'd like for me to do a little deeper dive on your individual property. I'll be glad to do that to get you an idea of where the market is today. If you're a buyer and you're thinking about buying along 30A, know that this is also a big, just a view from a really high view of what this market is. If you want to get a little closer on something specifically that you're looking for, just email me your criteria. I have an automated system that can email you automatically and immediately as soon as something comes on the market meeting your criteria. So without further ado, here's the numbers.
All right, guys, here is the residential sales analysis for 30A. This is really just the single-family homes, condos, only the residential portion of the market, not any of the land or commercial, just that residential portion. Here's the numbers, and I love these numbers. By the way, if you want this actual in a PDF form sent to you, all you've got to do is simply go to 30amarketupdate.com. I'll send you the breakdown of all of these forms, or I'll send you a PDF version of all of these forms where you can break the numbers down yourself, and also I'll give you the updates as I make them on a monthly basis so that you can keep up with what's going on if you're interested. 2015, 1,284 units sold along 30A. Now look, this is a big increase, 1,136 units sold in 2014. That represents an increase of 13% year over year of the units that we sold. Also, our sales volume. And what this really tells us is that obviously if you're a seller, there are buyers out there. If you're a buyer, there are properties to buy. A really good balance. When you begin to see the number of transactions we're seeing a balance of buyers and sellers in the market. So it's a really healthy place to be. Sales volume. Huge number, $1,129,204,178 worth of sales volume, just residential units along 30A. Here's the big increase from 2004, from $905 million up to this. This is a $224 million increase year over year. Now, what's amazing about this is that this represents a 24.74% increase in the average and the sales volume that we had year over year. 224 million. If you just go down here to 2001, the total market in 2001 along 30A residentially was 153 million. We saw an increase of 224 million, a huge increase. Just a few minutes, I'm going to tell you where some of that increase is coming from. Average sold price, $879,443 versus 2014 of $796,763. That $82,680 basically breaks down to a 10.3% increase in the average sales price. Very, very healthy growth. Average dollar price per square foot. Our average square footages are going to stay fairly similar year over year because we're selling the same products. Here's our average dollar price per square foot, $383.47 per square foot in 2015. 2014, $349.01. That difference that you're seeing there from 2014 to 2015 represents a 9.87% increase. which is in line with our average sold price increasing somewhere in the 10% range. Now, here's something to look at also on this average sold price increase. When we're looking at that, we're looking at 10.37% in 2015 over 2014. If we're looking at 2014 over 2013, that's a 9.37% increase. If you're looking at 2013 over 2012, now we're talking about a 14.47% increase year over year. Now, these are big, solid moves for 3 solid years there. You're going to see we've had some ups and downs in here, and I'll explain those in just a few minutes. But after we look at these numbers, here's something that I really watch for to see what the market is going to be doing in the future as well. Days on market. The DOM here stands for days on market. That's the time frame it takes for the average of these houses that sold to sell from the time that they come on the market. Basically 5 months is what we're looking at right now. Now, it's an average, but that gives us an idea. If you look at these numbers going back all the way to 1998 here, there were only, and we saw flattening last year, it was 150 days as well, just a healthy market, a really, really healthy market. These days, the only 2 years that this average days on market was lower than this, or 3 years we're looking at, were the hottest years we ever saw, which were unhealthy growth, obviously because it was a boom and then a bust. So if you take those out, we're in really good shape here as far as this goes. So when you're looking at these numbers, I kind of want to give you some key takeaways that I'm seeing from what these numbers really mean to me, because when we're looking at these numbers, obviously this makes a lot of sense. We see very healthy growth. But we're not just worried about what's happened in the past, although it will help tell us what's going to happen in the future. So here's some things that are really driving the market. I want you to notice that since 2006, we've seen an increase in the number of transactions since then. All right, so we go from 332, 406. We've seen 9 straight years of an increase in our number of units sold. Now, the average economic cycle runs around 7 years. That's an average. We're at 9 years. At some point, we should begin to see this begin to flatten out some. That's something that I'll be watching into the first quarter to see if we see a flattening out there. We're not seeing that, at least with what we have pending right now going into January over January. But this is something I'm going to be keeping an eye on, is the number of sold units. Will this begin to flatten out? Because it could be a foretell to what's coming as far as potentially a pause or even a slight pullback at some point in our market. We all know that comes sooner or later. There's really a number of things that are driving these things as well that are different than we've ever had in the past. I can only speak for my business, and I speak to a lot of agents, and they say it's the same in their business as well. But over 50% of my business this past year were cash transactions. Now, this is driven by a couple of things. One is that high-end asset individuals have been searching for returns. And what I mean by that is that if you've got money parked in a bank and it's making a CD less than 1%, and you have the capability, because here's what's great about it is now short-term rentals, if you were to buy based on cash and you pay cash for that, after your expenses on an annual basis, your maintenance, your insurance, your association dues, any expenses you would have on that home, when you're looking at it, you should be netting out somewhere in the neighborhood of 2 to 3% on your cash. That number, just think of it this way. If it's $1 million purchase, you should be netting out after expenses between 2 and 3% on your cash. So it gives the investor or the second home and purchaser or investor the ability to purchase something, place some cash that they have sitting in a bank earning no interest, have a safety net, so to speak, of 2 to 3% return on their cash, and also have the ability to have some capital appreciation. It almost makes it like a growth and income stock or an investment that has the potential to have some capital appreciation, and it has the ability to generate some income. And we're not even taking into account any depreciation or tax benefits that you may have. This really gives people the ability to have their cash work for them a little more, enjoy the asset, and that's one of the things that's been driving the amount of cash that's in our market. It also gives us a safety net, because we all know that sooner or later, all markets pause or pull back to a certain extent. We can't go up forever. When and if that happens, it gives the ability to have an income generated to offset some of the expenses of holding that asset, or to continue to go from a top where you're looking at an asset that you can continue to just begin to bring income in that can lower your cost basis in that asset. These are some of the things that are really driving the market. This was not available in past markets. We didn't have that capability because the rents weren't there. So I want to point out a few things to you that are really driving this and some of the things that we're seeing right now. One of those things is that 2010, if you'll notice here, the numbers in 2010 is where we really began to see, we saw some growth here. We saw some solid growth here. But when we really saw our sales volume go up and our transactions begin to really escalate was 2010. There were two events that happened that brought this on. The first one was the BP oil spill that happened on April 10th, 2010. Now, what was believed to be something that could be catastrophic economically to our area ended up in the long run being a boom, because if you'll remember back, BP came in and our beaches were minimally affected by it. We did have a time period there where we did not see as many visitors as we did. It was very short-lived because BP came in and they spent the money on the advertising that went nationwide to markets we had never reached before. And in the markets that we had reached, it was just flooded that, hey, our beaches are great. Come back. We're ready for you. We're excited for you to be here. And just that advertising really was a boom to both our tourism, which also leads to more sales. The second event that happened was that when we were looking at 2010, we also had the Northwest Florida Beaches International Airport in Panama City Beach open on May 23rd, 2010. Now, this gave us the capability to have direct flights from Atlanta, Baltimore, St. Louis, Houston, Dallas, Orlando, Nashville, and Tampa. It also got us new carriers. We got Delta, Southwest, United, and Silver Airways. And with the increase in what happened over at VPS in Valparaiso, where it began to get those carriers in that location to begin to try to be more competitive, all of a sudden it helped lower costs as well coming into our area. Now, if you're wondering if this made a difference, let's just check the numbers. Here we are, 2010. Look at these numbers. 2010, we had 635 transactions. Here we are, only 5 years later, 1,284 transactions, which is basically a double of the amount of transactions in that short period of time. Now, these are influenced by that amount of the advertising that was done, and also obviously of the new capability for people in other places to get here very quickly and very inexpensively. Also, look at the sales volume, 380 million in 2010, and now here we are at 1.1, almost $3 billion, almost a triple amount of sales volume in that 5 years. So these are some of the things that have really affected that. Now, how did that affect us? Because I want to show you another statistic that I really kept to keep a close eye on. This is the tourist development tax revenues, basically the bed taxes that are collected. If we go back and look at these numbers, you can see that when we were looking here, we saw basically steady 2010, 2009, 2008, 2007, 2006, 2005. Really, these are fairly steady, especially 2010 to 2006. But then we see the increase in the amount of advertising spent by BP, and look at these increases. Boom, 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 boom. Here we are now at over $20 million in tax revenue, bed tax revenue this last year, which gives us the ability to advertise more. It gives us the ability to continue to increase our beach walkovers. A lot of things happening that have done this. A almost double amount of tax revenues, which means that basically we had an increase of almost twice as many people coming in. So did it have an effect? Opening the new airport, did it have an effect with the BP funds? Absolutely it did. Now, this is something that I'm watching also is we saw a flattening in 2014 to 2015 of the bed tax revenues. We see increases coming in here. So are we seeing a flattening here, like I mentioned, that we were looking for? This is something I'm going to keep a close eye on to see if we're seeing some flattening there, which could lead to a flattening in our real estate market, which could obviously be the foretell of maybe a pause in our market.
All right, now that we've seen the numbers, let me give you some ideas of some things that I'm going to be watching that could be affecting our numbers in 2016. The first one is interest rates. We've been at a historically low rates as far as in our market and in the national market for an extended period of time. We just saw the Federal Reserve raise the rates just slightly at the end in the fourth quarter of 2015. Will that continue in 2016? It's yet to be seen. But as we talked about in the previous video, if we see increased in interest rates where that cash that's on hand that a lot of people are pulling into this market and purchasing property with, if they have the ability to do something that's a little less volatile when the bank rates, then maybe we may see a pullback in some of that. How will interest rates going up on the mortgage rates, although they're still historically low, how will that affect the people considering purchasing? Those are some things that we want to see as they develop in 2016. Another thing that I'm going to be watching is that we have a tremendous amount of infrastructure going into place here. If anybody that's been down recently, you know they're building the bridge, expected to be finished in 2017. We're having 4-laning of 331. We've seen 4-laning on Highway 79. We're seeing all of the accesses coming in and out are becoming more and easier for people to get in and out of our area. That will give us the ability that we'll see more traffic that can come in and out, where we don't have the Saturdays on the turn days where we've got it backed up going south in the afternoons and backed up going north in the mornings as people are leaving. Some of those things that we're going to be watching also is what will St. Joe do? You know, St. Joe really controls our market. They announced this past year a 50-year plan for development in the Walton Bay sector. They actually updated what they were planning to do. A lot of it's driven by the fact that they loved what had happened down at the villages. They were looking at what's an option, and there's only a few people, and they're the only one really that I know of, that has the ability to have contiguously 100,000 acres plus of land that they could do a development similar to the villages. The majority of that would be in the north portion of Bay County. About 10,000 plus acres would be in the Walton County area. They would have access to all of the amenities in Walton County on the beach and water sound, and obviously with watercolor and all of the different developments that St. Joe has. What will they announce this year? How will that affect us? What will we see happen with our airports? Will we have increased ability for new flights coming in, one-way flights coming in from different markets? All of those things can affect our market in 2016. No matter what it is that you're thinking about doing in 2016, I'd love to talk to you and share with you what my ideas are, or what it is that you may be looking for in your individual situation. This has been a broad overview of the market, but each of us have our own individual plans and have the own individual needs for what you're looking for along 38. Don't hesitate to give me a call, and if you'd like a copy of this report that I've just been talking about, the PDF version, simply go to 30amarketreport.com and you'll be able to get a copy of that report. I look forward to hearing from you soon. Have a great day, and 2016 is going to be another great year along 30A.